Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about the top market events to be watching today. Among them will be the US Producer Price Index data that is coming in the afternoon. So at the same time, we also be having the weekly unemployment claims. There will be a focus on the US crude oil inventories, and of course, towards the end of the day, we'll be having a speech from both Jerome Powell as well as the US Treasury Secretary, Janet Yellen, later in the night. So we'll be going through that, and towards the end of the session, we'll be doing some technical analysis, trying to understand the prevailing market patterns. And once we go through that, hopefully everyone will trade from an informed perspective. So as always, I'll start with a disclaimer. This session is not investment advice. It is not a recommendation to trade. So you should always practice proper risk management and at the same time do your own research. So good morning, everyone. I can already see some good comments here. Hello, Max, and thank you for joining. Robert Kovale, good morning. Rainix, Jason, Samuel Njoroge, Lewis Mutembei. Thank you guys for joining. Noniza Jack, good morning. So Team Meru is logged in. Thank you guys for joining. Let's get things done. So straight up to the economic calendar, as you can see, we had some data coming in the morning. So among the most important ones was the Australian job report, where the economy increased by 15.9 thousand jobs. And this was a big miss compared to the previous reading, which was 61.3K. And this was a revision from 64.1. So clearly, the Australian economy is weakening and creating even fewer jobs. So even though we had a projection of 25.2K, we saw a much smaller number, leading to a further weakening of the Australian dollar against the US dollar. So at 1 p.m., we'll be getting more data from the Eurozone, including the flash GDP quarter over quarter. We'll also be getting the flash employment change, as well as industrial production data month over month. So this will be a key indicator for the Eurozone. And if we happen to see positive results, then there's a good chance we could be seeing the European stocks making a recovery. So we are getting quite a number of speeches today. FOMC member Kugler, ECB monetary policy meeting minutes at 3:30 p.m. Then MPC member Mann from the UK at 4 p.m. NI ESR GDP estimate for the UK will be somewhere between 2 and 4 p.m. Then the main event for the day will be happening at 4:30 p.m. This is the US Producer Price Index, the core PPI, and the unemployment claims will all be coming out at the same time. So we all know that inflation had an uptick yesterday, moving from 2.4 up to 2.6%, indicating that the US could continue holding rates higher for longer. So the other confirmation data will be the Producer Price Index. So if we see a much bigger increase than the previous reading, then that will continue leading to the narrative that inflation is on the rise again, which means that the US may have to hold rates a little bit higher for a little bit longer. So that will be the key focus of the day. Of course, we have the unemployment claims, which have not been making much of a change in recent weeks. So we will not be expecting much from the claims. Trying to load this one and it's taking some time. So, okay, finally, I think it has loaded. Yes. So, as you can see, we haven't had much of a big change in the unemployment claims. However, from early January this year, you can see that the overall trend has been bullish, basically implying that unemployment claims have been increasing bit by bit, showing that the job market in the US has been worsening since more and more people are claiming for unemployment insurance. So then we have the crude oil inventories as well as natural gas storage data coming up at 6:30 p.m. as well as 7 p.m. So in this case, we're expecting crude oil inventories in the US to have reduced from 2.1 million down to 0.4 million barrels. So there is concern globally that the global economy is slowing down, and with slowing down comes with lower demand for crude oil. But at the same time, there are concerns about the OPEC Plus nations looking to expand their oil production, which will likely push the oil prices much lower. So we'll be getting a speech at, by the ECB President Christine Lagarde at 10 p.m. Then at 11 p.m., we'll be getting a speech from Fed Chair Jerome Powell. This will be a very important speech as investors look forward to getting a direction on the US monetary policy, especially after seeing an uptick in inflation. So at midnight, we get yet another speech from Bank of England Governor Bailey. So this will also have some impact on the UK pound. And one event that is not on the economic calendar is about Janet Yellen. So I'll try and find the link. So the Biden administration announced a series of new affordable housing initiatives, and this plan includes $100 million fund and expanded federal financing bank support in an attempt to combat the toll high mortgage rates taking on the US housing market. So the US Secretary of the Treasury, Janet Yellen, will sit down with the Who Finance Jennifer Schonberger for an exclusive interview at 4:45 p.m. Eastern Time to discuss the administration's efforts. So when you convert this to Kenyan time, this will be about 45 minutes past midnight. So right after seeing the Jerome Powell speech, 45 minutes from midnight, we'll get another speech. In this case, it's an interview from the US Treasury Secretary, and she might be dropping some good hints on monetary policy as well as fiscal policy, which could lead to more activity or more volatility in the dollar. So on Wall Street, the major indices are mixed with Nvidia trading over 6% lower. So Yahoo Finance's trending tickers include Alnylam Pharmaceuticals as well as Afam Holdings and AT&T. So that's it on the speeches side. But on the oil side, there's quite a number of things happening. So oil prices don't have a sustainable path higher, and this is from an analyst with CFRA Research Energy. So Grickman forecasts mediocre crude oil pricing for 2025, projecting that the WTI crude oil might drop to $65 per barrel and Brent crude somewhere close to $70 per barrel. So he knows that the current price range is likely to persist. However, he cautions that this outlook is not great news for energy investors. He points to record high oil production levels, which he expects to plateau in the coming year. Couple that with a wobbly demand outlook, and I don't think it's great for pricing, Grickman explains. He tells Yahoo Finance that oil markets haven't really found a sustainable path towards much higher oil prices. So that's a key concern in the market, and you can already see it in the charts that any attempts to move oil prices higher have been met with more selling, and we have seen more downside momentum compared to the upside. So outside of that, there is key highlights in the markets today. So CNBC daily open higher for longer rates could rear its head once again. So what you need to know today in the market is one, the headline inflation rate in the US came in at 2.6% for October, in line with market expectations. Core inflation, on the other hand, which strips out prices of food and energy, held steady at 3.3%. The headline reading is higher than the Federal Reserve's target, which might complicate the Fed's easing path. So this morning, the markets were mixed after the inflation data. So US markets were mostly range-bound after the October inflation reading, with the SP 500, the Dow Jones rising 0.02% and 0.11% respectively. So the Nasdaq Composite ended the day with a 0.26% decline. In Asia, markets traded mixed, with Hong Kong shares dropping more than 1%. So Chinese AI startup takes aim at OpenAI. the Beijing-based Shenshu Technology, said its text-to-video tool, Vidu, will now be able to generate videos by combining images, expanding on its existing functionality of creating 8-second clips based on written prompts. While OpenAI, the maker of ChatGPT, said in February that its AI model Sora could generate 1-minute videos from text, it has yet to release the product publicly. So clearly, the AI race is now accelerating, and now we are looking at Chinese companies versus American companies. So AMD announces layoffs. Chipmaker AMD will lay off about 4% of its staff, or basically about 1,000 workers, as it tries to strengthen its position in the artificial intelligence chip space, currently dominated by NVIDIA. The firm had 26,000 employees at the end of last year, according to the US SEC filing. So AMD is the second biggest producer of graphics processing units, or GPUs, and it's only second to NVIDIA globally. So on top of that, Wells Fargo urges caution on the Trump trade. Of course, we know what the Trump trade is. We have seen a very strong dollar, and at the same time, US equity indices have made a very strong rally and hit new all-time highs after Trump won the election. So the bottom line, Shakespeare famously said, all the world's a stage, and all the men and women are merely players. They have their exits and their entrances, and one man in his time plays many parts. With October's inflation reading coming in line with expectations, the stage seems set for a final rate cut in December, bringing the Fed funds rate to the central bank's target of 4.25% to 4.5% that it had set in its so-called dot plot released in September. So it's important to note that the October reading is the first time headline inflation has risen since March this year, and the 2.6% figure is higher compared to the Fed's target of 2%. As such, the path is now less clear for 2025. US President Joe Biden will make his exit from the Oval Office on the 20th of January, and President-elect Donald Trump will make his entrance with all his promises of tariffs, as well as tax cuts for Americans and American companies. So the one man then that has to play many parts, like the Fed, Jerome Powell, going back to the dot plot, the Fed in September had expected that rates will be cut by another 100 basis points by the end of 2025 and another 50 basis points by the end of 2026. However, this could be unlikely if inflation continues to rise. However, as economists have said, Trump's policies, if followed through, are likely to be inflationary, and with the projected Republican trifecta, control of presidency, Senate, and the House of Representatives, the possibility that he will be able to enact what he promised is increasingly possible. What this means then is that the Fed may be forced to slow or halt its easing path if inflation ticks up again in a second Trump term. So in short, the term higher for longer may rear its head once again. So that's the main sentiments in the markets today, and that may explain why we are seeing a much stronger dollar. So on the Asian recap, we had quite a number of things happening this morning. So I'll be showing you a brief highlight. Sorry. So Asian stocks drop, a strong dollar and China weigh, and this is the Asia market wrap, basically saying or talking about what happens in the market during the Asian session. So when you talk about the Asian session, think of two main sessions. One is the Sydney Australian session and Tokyo Japan session. So Asia, apologies for that. Asian shares fell last day as the dollar's continued gain and weakness in China weighed on the region's risk appetite. Japanese stocks rose as the yen plummeted. The MSCI Asia Pacific Index fell as much as 0.5%, with shares in China and Taiwan falling while those in Australia rose. Hong Kong equities fell on weak volumes as the market remained open despite warnings of severe weather. In Asia trading, the dollar index surged roughly 0.2% to a 2-year high, while the 10-year US Treasury yield increased for the third consecutive day. US stock futures declined. Assets in the area have fallen since the US election as investors weigh the implications of Trump's proposed tariff policies on regional economy, while the rising dollar puts pressure on the region's currencies. The MSCI Asia Stock Index is on track for its worst week since April this year. So the yen sank further against the dollar, reaching its lowest level since July. The collapse has sent the yen back to levels seen when Japanese officials last intervened to support its currency, with the country's top foreign exchange official warning about the one-sided abrupt movements. So it has been quite a concern for some good time now, I would say 2-3 weeks, where the dollar has been really gaining against the Japanese yen. But now the Bank of Japan and the Ministry of Finance in Japan are looking to make an intervention if the yen continues sliding against the US dollar. So with that being said, I think now we are well prepared to do some technical analysis and approach the day knowing exactly what to expect. So I can see Lamik Bure is already in the house. Thank you for joining. Isaac Muhoro, Rono Hirari, Aikobo Frank, Max Violet, thank you guys for joining. Lewis Mutembei, Paul Carey, Irene, thank you guys for joining. Max, thank you for joining. Tulaj, good morning and thank you for joining. Of course, if you have any questions related to the presentation, feel free to type them in the comment section and I'll be responding to that as we approach the end of the presentation. Good morning, Raino Kubwa. Nashon, thank you for joining. So let's jump straight into some technical analysis. So as we all know, Bitcoin has been the main asset of the week and of the month. So far, we have seen it make some substantial gains since the start of the month. And as you can see from this chart, this month, Bitcoin has been able to gain by 31.6%. And that has been quite a strong rally. This week only, since the close on Friday last week, the market is up about 19%. And of course, if you look at the price action over the last 2 days, it seems like the market was getting into a range. In this case, we had this pullback happening on Tuesday. Then yesterday, we pushed into an even higher price, in this case, a new all-time high at $93,255 per Bitcoin before we had some sell-off towards the evening. So today, we are seeing a market that was relatively sideways, meaning that nothing much was happening here. And then we got this breakout early this morning, and this is leading to some good rally. So apologies for that. So the expectation today is that the bull market continues and potentially we break into a new all-time high above yesterday's high of 93,255. So the demand remains strong. There was a record number of billions traded by spot Bitcoin ETFs yesterday, indicating that there is increased activity by participants in the spot market ETF, spot ETF market, sorry, and we could be seeing some further upside today. So other than that, we have other things happening. Of course, we all know the big sell-off that has been happening in gold. So yesterday and the day before that, we had more sideways momentum in gold. So nothing much was happening here. We saw the market relatively just being sideways, and then eventually we had a breakout. So the breakout was not that straightforward. So at first, it was a rejection of higher prices. You can see the long tail here. Market attempted to move higher, forming a false breakout, and eventually made a breakout in the opposite direction. So there was a breakout, retest, and a continuation, and that has been the clear path since yesterday, having seen a very strong bearish momentum in gold. So on the daily, if you check the daily time frame, you will notice that now it's no longer just a pullback like the previous ones. Here we are seeing more of consecutive bearish momentum. The last 5 days, it's a day after day of gold taking a beating from the dollar. So I would say that this month started on a bearish tone, and we have continued to see gold taking even further steps backwards. So if you go to the 4-hour chart and then you check out the previous levels, then this area here was acting strongly as a major resistance area. So I'll try and highlight this. So this was the area that the market was finding as a strong resistance before it eventually broke towards the upper side. So the previous resistance now turned into a support area, is our likely target for this bearish momentum. So we could be seeing this market extending the bearish move down to around 25-29 price level. So from the 1-hour chart, this is how it looks like. So any form of pullbacks will be welcome to look for even more shorts in the price of gold. So we already mentioned about oil and the struggle that Brent oil and WTI are facing in making a comeback. So from what we are seeing as the price action this week, especially considering what happened on Tuesday versus what happened on Wednesday, then this seems like the likely trend line. And on the lower side, you can already see that this market is consolidating if you exclude what happened here. So if you exclude the big sell-off that was met with an immediate reversal yesterday, then the overall support area seems to be following this trend line, and at some point will be due for a potential breakout. So this bottom here was a key level support, and the market basically short stayed at support and reversed immediately. So this is looking more like a pennant or flag, where the market made a very strong bearish momentum in the last 2 days. This was Friday and Monday this week. Then Tuesday, Wednesday, and Thursday, it seems we are trapped in this consolidation. And at some point, we should be expecting to see some form of breakout. So that breakout could either happen towards the upper side or to the lower side. And that could be the signal to identify a trading opportunity for Brent oil traders. So for now, the market remains within that consolidation. If you use a smaller time frame like the 15 minutes chart, then it will be easier to identify the eventual breakout. So for US equity indices, I would say that this is a range, and the range has only continued. So sometimes it's important to adjust your analysis, and in this case, we move the lower bound of the range a little bit lower, and we can say that the market is still stuck in this sideways momentum. So eventually, we'll be seeing a breakout, but that hasn't happened yet. And now, if you remove the rectangle here, I think now we have some key points to be using to shape our trend line here. And of course, from the lower side, this has been the eventual trend line. So it's more like the Nasdaq is trading in a flag. So we should be waiting for the eventual breakout. For the US 30, we saw a new all-time high last week. And now this week, the market is really struggling to form new highs. So if you go to the 15 minutes chart, I would say that this market is now potentially forming some form of a trend line. From the lower side, it's more like the market found support along these areas here. Of course, we will be patiently waiting to see when that breakout eventually happens, and more likely if it happens around here. So for the Russell 2000, it's something similar. We had a triangle and a breakout towards the lower side. So this is something we already analyzed with you guys. So the market made a breakout to the lower side, retested and continued moving lower. But now, from what we are seeing here, if I now eliminate the previous analysis and we have a cleaner chart, then this seems to be our trend line here. So with this working as our trend line, then it's pretty clear that this morning the market is finding some nice support along these areas here. Sorry. So this was the key level support, and the market is simply bouncing from the lower trend line. So for the week, this is quite a bearish momentum, and now a very strong bounce, which may likely go to retest the upper boundaries. So we could be seeing the market making this rally and extending it towards the upper trend line around 2400 to 2403. So US 500 or the S&P 500 also had a breakout, in this case to the lower side. And now using a smaller time frame, in this case the 15 minutes chart, then it's more likely that the market is operating within these limits. And then from the lower side, if you check, you'll notice there is a coincidence of these bottoms following this path here, with the exemption of this one big momentum here on Tuesday. So here we are looking at a potential breakout. The breakout could be happening towards the upper side. So we continue observing and wait for that eventual breakout. If it breaks above this trend line, then we could be headed into a new all-time high. So on the currency side, we have the USD JPY making some substantial gains. So this is something we have been discussing right from Monday. So clearing, this is the fourth consecutive day we are seeing a bullish momentum. So notice from Monday, the market bounced from here. We had this rally, the market stopped here. Then on Tuesday, even higher. Wednesday, which is yesterday, breakout retest continuation. And then today, even further continuation upwards. So from the daily time frame, this is how it looks like. So almost a vertical movement in USD JPY. And now the next available price action level is somewhere around 157.658. So the bullish momentum is expected to continue as the yen remains weak across board. So we could be seeing this extending all the way up. So remember, if you're trading this pair, you have to use tight stops just in case the Bank of Japan decides to intervene. We could be having one big drop happening in the charts. So the other previous times when we have seen the Bank of Japan intervening in the currency market, this is the kind of price action that we got. So it's a big swing that could happen. We saw it happening here. And all these moves had the footprints of the Bank of Japan intervening in the currency market, leading to a big sell-off. So you have to be very careful as you go for the bullish positions. So for the Australian dollar, after having a much weaker job report, continued weakening and pushing even further downwards. So among some of the targets we had over the week was this one big drop to this area here. So the market stayed there for a day, eventually broke out towards the lower side, and today has continued moving even further downwards. So from the daily time frame, it seems like the market is pushing even further downwards, and the next available target is 0.64437. So looking for entries that buy the dollar short the Australian dollar might be the way to go today. So for pound yen, we are seeing this recovery really struggling. So I remember on Tuesday, we mentioned that we expect the market to get to this area here. And once it gets here, we look for a bounce and a rally towards the previous high. So the market bounced quite well, but did not get to the target. So we had a pullback to the same level. So now you can see the retests here, this area on Tuesday, then on Wednesday, and also on Thursday. So clearly, it's a very strong demand zone, and every time the market has gotten here, we have seen a strong rally. And now the targets, instead of being on this here, now we are looking at areas around here. So notice how the market has behaved along these areas here. So anytime we get there, we have seen resistance in the market moving downwards. So today the market opened with a gap downwards, closed the gap, moved even higher, and now it's really struggling to move back downwards. So from the 1 hour time frame, we can see that the market is still adamant on pushing even higher. So the idea is to see if the market breaks above this area here and then extends the rally to 198.416. So for pound USD, the bearish momentum continues. So from the daily, we had a target of 1.26759, and that target has already been hit this morning. And now we observe to see if there will be a breakout or a continuation. So we are at a key level decision point for pound USD around 1.26759. And from this area here, we don't know whether the market will continue moving lower or whether it will be bouncing from here. So it's more of a wait and see kind of scenario. So we wait and see what price does around this zone. If we see evidence of buyers coming back, then we could be getting a temporary pullback after the 5-day sell-off. But then if there's a clean break, then we continue expecting prices to move lower, with the new target being a little bit lower at around 1.26156. So this hasn't happened yet. So we could be seeing a bounce of this this sell-off. But then, as we mentioned, markets don't always move in a straight line. Sometimes you get those temporary pullbacks. So we should be expecting to get one temporary pullback soon enough. So for Euro USD, it has been one of the most bearish pairs of the week, having broken below this other support, and now it's gunning towards the previous one that we had in September last year. So this is the lowest that the Euro USD has traded this year, and now the potential for extending this bearish momentum is really high, with the market expected to get to 1.0461. So for now, on the forward chart, this is how it looks like. It's more of a falling knife. Don't try to catch it. So we continue looking for short selling opportunities on the Euro USD. And of course, if we see price action such as what we had yesterday, market attempting to move higher, then that will be the opportunity to go for even better short selling positions. So for dollar trading against the Swiss franc, we really struggled here, and this was within the month of September. Then October, we had the eventual breakout. So from the forward chart, this is how it looked like. So we were trading up and down here. Eventually, the breakout happened, and the rest is history. So after the breakout retest, we had a continuation here. Market pulled back to around this area, and then made a strong rally last week. And this week, it has continued with the same path, hit our target of 0.88813. And now we are looking at a potential extension of this bullish momentum. So that hasn't happened yet. So we continue observing the price action around this area to see if the rally extends to 0.89185. So from the 1 hour chart, this is how it looks like. So clearly, even on the 15-minute chart, you can see that the price is now beginning to struggle to break above that area. So looking at New Zealand USD, we are already at the key level decision point. So a very strong support area where the markets have previously turned towards the upper side. So now that the market has hit the same exact level, we should be expecting to see some form of reversal. We are already seeing signs of that. So notice the price action in the last one hour, indicating that buyers could be coming in. So upon getting more confirmation, then we should be looking for bullish positions. But then if there's no confirmation and the market doesn't print higher, then we continue extending the bearish momentum. So this is more of a wait and see, especially considering on the daily, it's a strongly bearish market. So unless we have evidence of buyers coming in, the prevailing market direction is bearish. So short selling positions are in favor. But then from the 1 hour chart, if we see more bullish momentum, then that might change the buyers for the day. So that's it for the day. Of course, we have the silver chart. We analyzed here on Monday, that we'll be getting some further bearish momentum. On Tuesday, we had some further sell-off. Wednesday is yesterday, so we retested the upper trend line again, and we had a big sell-off. And it seems like the trend line is now changing direction from the previous line here to this. So if you combine the most recent lows, they are following this path here, and the upper trend line is slightly changed, I would say this way. And now we are seeing silver prices slightly going below $30 per troy ounce. So from the forward chart, this is how it looks like. So we have already broken a major support area. And if this bearish momentum continues, then the next target area is around 29.684, which is quite close to the current price action level. So we could be seeing the market extending to 29.684 before making a bounce from these price levels. So that's it for the day. I'll be checking on the comment section to see if there's any questions. Seeing a question about gold, sell or buy. So as we mentioned here, it's more likely that gold will continue with this bearish momentum. The bearish momentum is too strong, and the next available area here is a previous resistance now turned into support at around 25.29. So we should be looking for short selling positions. Of course, if the market happens to rally, then that presents an even better opportunity to go for a short selling trade. So it's not always advisable to be selling when prices are low. Sometimes we wait for a pullback to enter at a better price, but the overall direction is still bearish. So there's a good question from Rynix. If you're interested in trading, what equipment do you need in order to trade? Like, am I supposed to have a smartphone and a computer, or even my phone alone only can work? So it really depends on how you use your devices. I know a lot of traders that use their smartphones. You just have to download the Equity Trader app by FXPesa. And if you consider your workstation as a laptop or PC computer, then perhaps you should go into that direction. So personally, I consider a laptop a much better approach. You don't have as much, let's say, notifications and stuff. So you're able to prioritize your trading activity by using that laptop as your trading desk. And that can be much better in terms of analyzing your charts and keeping notes and everything. So perhaps a laptop is much better than a smartphone. But if you prefer a smartphone, either way, the goal is to win here. So the other question is, how can I know a legit broker in the market? So you always check with the regulator. So if a broker is not licensed and regulated in Kenya, yes, they might be legit in another country, but for investor or trader protection, you are better off with a broker that is licensed and regulated in Kenya by the Capital Markets Authority of Kenya. And for that sake, I would recommend that you go with FXPesa, where we have a large offering of different assets. And of course, we'll provide you with daily support in analyzing the markets. So my view on PPI news is that if we see a PPI that is much higher than expected, then in that case, we should be expecting the dollar to continue strengthening. So if it's weaker than expected, then the dollar could take some steps back. So just looking at the comment section to see if there's anything I missed. So the Trump trade continues, Lewis. So the Trump trade, very strong dollar, might be the agenda for the week. So I haven't seen anything that would change the Trump trade. So for Rynix, if you have an issue on your MetaTrader 5 trading logins, the simplest way to do that is to basically approach our support. We have 24/6 support. So just go to the FXPesa website, hit the live support, and you'll get responses. You can also write an email to support@fxpesa.com and you'll get instant support. You can also log in to the account and reset the password from your browser. So that's it for the day. Thank you very much, everyone, and I hope to see you on the next session. So remember, we have a new episode of the Bullish Banter podcast available on all podcast platforms, including FXPesa YouTube. If you're just beginning your trading journey, check out the Novice to Pro series. It's available on the FXPesa YouTube channel. It will help you transition from a complete beginner to at least an intermediate level trader. Of course, with practice, you get to become a pro level trader. So on top of that, if you are just beginning your trading today, make sure to check the links in the description below to register for a trading account. You can get a live account as well as a demo account. The demo account is free of charge. and you'll be able to practice before you start trading live. And if you're watching this on X, remember to visit the FX Pesa handle to register for an account. And I always appreciate when you like and subscribe to the channel. And if you're watching this on X, if you like and share the video, this is more than enough for me. Thank you very much, everyone. See you on the next session and have a happy trading day.